Hi, good morning. Good to see you. It's nice to know that another place in the world is also experiencing cold, snowy weather, like we are in Canada, sharing our misery. But anyway, it's good to see you again. I'm John Ciampalia, the CEO of Sprott Asset Management, and I'm very welcome to talk to you about the wonderful world of uranium. It's been a wild year for just about every market in the world. King Dollar seems to have gotten the prize this year. And in terms of being the dominant driver of many different asset prices around the world, but it feels like King Dollar is getting a little tired and maybe he's going to hibernate this winter. So I think the world of commodities might finally perk up a little bit. We've been incredibly busy this past year talking to investors right around the world about physical uranium as well as uranium mining equities. Sprott offers the largest physical uranium fund in the world, the Sprott Physical Uranium Trust. And then we also have a uranium mining ETF listed on the New York Stock Exchange. And then more recently in Europe, we partnered with Han ETF to replicate that product, which is now on the UK, Italian, and German exchanges. So investors, we're finding, are increasingly interested in uranium and uranium stocks, and we're seeing a number of different uranium funds get launched around the world, which is great because I think a number of different product sponsors are seeing the opportunity, and we're seeing new funds launch in Europe for the first time. In Australia, a couple of funds have just arrived, and I think that's a very healthy sign that people see the investor demand.
Brilliant, John. Great to have you on the show, for sure. And we're going to kind of go and pitch this one out. So, people new to uranium and the nuclear thematic, so get them up to speed and up and running. So you talk about King Dollar being a little bit tired, but I think the King uranium investors are also a little bit tired of the constant narrative without it sort of culminating in this sharp spike in price that I think that the bulls are looking for. So why don't we kind of kick it off from the beginning, because it kind of feels like the narrative from 2019 hasn't evolved much. Here we are at the end of 2022, or has it?
I think the narrative has done a complete 180. I really do. I think the last, say, 16 months has been kind of a watershed moment for nuclear energy. Really starting with growing support at the government level and public support level. I go back to COP26, and it's almost like nuclear energy, which was historically a bit of a pariah, all of a sudden got welcomed into the discussion because governments just, finally admitted that they have no chance of hitting any net zero targets without nuclear power being part of the mix. And, all of the investment we've made in renewable energy around the world has worked great. But as you know, in the UK, sometimes your wind production is not what the models predict, and you have to fall back to some other alternative source of energy production. And yesterday, for example, I saw that the wholesale price of electricity in the United Kingdom was, I think, at an all-time record high. So when these weather events happen, whether they're these kind of polar vortexes or whatever, and the system is strained, the reality is renewable energy is not always there to meet that peak power surge, and that's really where baseload power has to come from. So you really only have three options. You can essentially burn coal, burn natural gas, or have a nuclear power plant. And obviously the first two options there produce a lot of greenhouse gas emissions. And so if you're focused on net zero and you need to have that baseload power, that's where nuclear comes in. And, in the UK specifically, the government recently made its very first financial commitment to a new nuclear power build for the first time in 30 years. I think that's pretty telling. When governments start to make decisions like that for the first time in decades, that tells you something's going on. These things just don't happen. The winds just don't change overnight. This has been building in the system, and it does kind of feel like the dam is kind of broken here in favor of nuclear energy, which is really giving, I think, uranium a lot of renewed interest from an investment perspective.
Certainly has. I heard a frightening stat out of the UK. If we're going to focus on the UK for a second, is the fact that this whole period of energy security has cost the UK government what it would cost them to build 3 Sizewell Cs. That's a pretty chunky mistake to have made. Look, I will keep it broader because we've got a North American audience here as well. In terms of that kind of political narrative, I think the Russia-Ukraine situation has given permission for politicians to talk about nuclear and the baseload it delivers, whereas once they fear to tread. What are you seeing sort of over there in North America when it comes to actually enabling that? Because there's a long sort of delivery period if you are to either whether it be extend nuclear reactor life or start to build new SMR or reactors in the US, North America. How does that get speeded up? How does the government get out of its own way?
Well, I think the Inflation Reduction Act has probably been one of the key policy decisions in the United States that will have a huge positive impact on the existing fleet of nuclear reactors. I think it's fair to say that nuclear energy has been in the penalty box for a number of years. Who has been the golden child has been renewables. And they've received, numerous types of incentives, tax credits, carbon credits, you name it. Whereas nuclear energy's been left alone and not given any support. What the Inflation Reduction Act is going to do in the United States is allow nuclear power plants, the existing ones, to be hugely competitive against other forms of energy production, including natural gas. That will allow those utilities to feel a lot more confident about their ability to keep those plants open for longer. And we've seen when a plant gets a life extension, for example, in, let's say, California and Diablo Canyon, we see the utility all of a sudden start to make very different capital decisions, meaning the plant's not closing in 5 years. We actually need to go and procure more fuel because we're probably going to be operating for at least 10 more years. And you're starting to see those decisions trickle through into the markets. We've seen a lot of utilities come back into the market in 2022, buying longer term contracts for uranium, larger quantities, longer duration. And I would say more recently, what we've seen is also utilities coming in and buying more midterm uranium delivery. And our belief is that particular material is being used to top up existing inventories because during that enrichment process, we believe that many of these utilities are going to be signing new enrichment contracts that are going to require more uranium as its basic feedstock. And this notion that you've probably heard about and talked about around moving from underfeeding to overfeeding, we think it's starting to happen. We think the new contracts that are being signed are at much higher tails assay. And we see this activity in the midterm market where, you're talking about delivery in 2, 3, 4 years. We're starting to see that happen. And we think that's in direct response to them having to deliver more uranium to these enrichment facilities.
Right. Okay. And I kind of want to get onto kind of the supply demand fundamentals in a second. But it's an investor show, so let's talk about some of the ways that investors can invest into the space. Obviously, you guys set up, last year to buy up some of this mobile inventory. You've got a large ATM facility to allow you to do so. And you kind of came in as a sort of 800-pound gorilla in the, well, maybe not 800-pound. There's some big players involved, but you certainly were very, very important to kind of moving the dial when it came to the pricing and perhaps shaking things up when it came to, the control that utilities have over the, whether it be spot price or term contracts. So how do you think you have performed? I mean, 2022 has been tough. Was it tougher than you expected?
Well, I think it's been tough in the sense that we started off with a ton of momentum. If you think about where we were on January 1st, 2022, the price of uranium was at $42. Remember, it had gone from kind of 28 to 42 from May 2021 to the end of the year. So we had a big move in the back half of 2021. There was a lot of momentum building in the system. And what did we see after that? Well, we saw a move from $42 to $63 over the next 4 months. And I would say probably that last $10 per pound from 53 to 63 was entirely on the back of speculation that there would be sanctions against either Russian uranium or Russian uranium-related services. And when those sanctions failed to materialize, despite lobbying by certain senators in the United States and so on, when that did not materialize, we saw the price of uranium kind of deflate $10 pretty quickly. And it's been kind of meandering around 48 to 53 for the last few months. So are we higher on the year? Absolutely. Do I think people expected and hoped for a much more sustainable rally? Absolutely. But I think everybody has to keep in mind that we've had a big move. Uranium price is up around 70% in the last 16 months. It's a pretty meaningful move. When I also compare it on a relative basis to some of the other commodities this year, if you look at oil, oil is down almost $50 a barrel from its peak. So many commodities are back to, pre-Ukraine invasion levels, which I think is probably one of the biggest shockers for most investors, that a lot of the initial price increases that we saw on the back of the disruption to energy markets did not hold. Uranium has done, I think, relatively well, given the backdrop we've been operating, which is an incredibly difficult monetary tightening environment.
Yeah, I guess it's better stay away from Russia politics and sanctions. Broadly, but keep it to energy. I guess there was no plan B, certainly not in Europe, and I'm not sure there was a plan B in the US either, which kind of restricts the ability to make decisions on sanctioning around energy, which is affecting us all. Like as you said, we're experiencing very high prices here at the moment, as is the rest of Europe. So can we just again remind people what it is that you set out to do with Sprott Physical Uranium Trust, and how do people how do you succeed and how do investors succeed as a result?
Yeah, sure. So the Sprott Physical Uranium Trust is simply a vehicle that allows an investor to participate in the physical uranium market, and that's U3O8. So if investors are interested in the trust, and if the trust trades at a net asset value that's above the prior day, we have the ability through an at-the-market offering to issue new units through our underwriter. So it's a very simple, mechanical, kind of passive process. Earlier this year, we raised about $900 million US through this mechanism. So investors were interested in participating in uranium, and through that process, we raise capital and we buy more physical uranium. So right now, the trust holds a little under 60 million pounds of U3O8. And just to put that into context, that would be enough uranium to power all the nuclear reactors in the United States for a little over a year. So it's a pretty significant quantity of material. But we buy material in the spot market. The bigger market is obviously where the utilities play. That's called the term market. So utilities buy uranium on multi-year contracts, and they do that so that they're never caught short with any kind of supply squeeze. And that supply squeeze obviously has happened right now in Europe with natural gas, and I would say coal obviously has been squeezed as well, because people are looking for any source of energy production to deal with what's happened there. So it's a pretty simple vehicle. Since the vehicle was launched in July of 2021, we've purchased about 40 million pounds of U3O8. We believe that has helped to rebalance the market. The market was clearly out of sync, meaning there was a lot of secondary supply that was suppressing the market for many years. Our buying in over the last 14 months or so, combined with the significant contracting that the utilities are re-engaged with, I think has really put the uranium market in a very different position today than we were 12 months ago or 2 years ago. And I think that's what's attracting a lot of investors. This has been a sector that has been largely ignored for a long time. It's not uncommon for me to have introductory calls with very large money managers that are running resource funds. I'm not talking about general equity funds, but just resource-oriented natural resource funds. And they literally have zero allocation to uranium. And for many of them, it was, we invested in uranium in the last cycle, but that was like 10 years ago and we've largely ignored it. So we need to get back up to speed. I think as more and more investors do that work and research and understand the fundamentals of the market and how it fits in with all the other parts of the energy supply chain, I think is becoming more and more interesting to people. And a lot of capital is coming into the sector. And we believe a lot more capital needs to come into the sector, because the reality is that the price of uranium at $50 a pound, I mean, that's great. We've had a big lift from the high 20s per pound, but it's really not enough to really deal with the long-term supply deficit that we think will build as more and more reactors are supported and built around the world.
Absolutely. And look, I think there's a lot of anecdotal information talking about well, how difficult it is to find, some of this mobile inventory, the enriched, UF6, and obviously prices going up across the board. But were you surprised how long it took, or how long it's taken to get to this point? Because when you walked in, it's the uranium sector is a very small sector, and that's why some of these generous funds aren't in, and they're not allocating any capital. Even the resource funds are not allocating capital. It's just so tiny. But you surprised how long it took to actually mop up the bulk of this inventory that you've acquired, and then how little effect it's had laterally, I guess.
Yeah, I mean, I would start off by saying that the investor response we've received since the trust started has been unbelievably positive. I think the trust has really helped with price discovery, liquidity, which were really lacking in the spot market. We've had many different participants tell us that they have a much better sense of where the market is day to day. No, but there's also periods of times over the last few months where we haven't been very active, and we've been on the sidelines because the trust has been trading at a discount to NAV. And we see institutional investors see that discount and say, hey, that's an attractive entry point to me. So we find there's really two groups of investors. There's kind of momentum investors that are kind of chasing it when it's moving up. And then we see value investors that love to buy the trust when it's trading at a discount to NAV. I think for both sets of investors, it's not about the next dollar or two per pound. I think they have a very bullish, longer-term outlook on uranium. Many of these institutional investors have said to me, look, I'm not buying this for the next $5 per pound. I'm buying this for the next 20 or 30 or 40 or 50 or whatever their particular view is. And I think what we've learned in 2022, I think the biggest lesson we've learned globally is just how susceptible our energy systems are to disruption. And, unfortunately, the world is paying a very high price for that right now, because energy costs are so significant, and electricity prices have obviously really taken a beating, for the consumer and the business person in terms of the price spikes we've seen in electricity this year. So I think what's happening is we're now changing our mindset. It's all about energy security. I think governments around the world are openly acknowledging that. People are increasingly concerned about the vulnerability of supply chains when it comes to energy, semiconductors, you name it. This is really changing. And I think what's going to happen is you're seeing governments around the world, for example, where I am in Canada, they just announced a critical minerals strategy. They want to fast track mine development. Why? Because governments are realizing that in order to hit these longer term goals that they're setting, whether it's decarbonization or energy security related goals, they need to reshore some of these supply chains. Whether it's the production of lithium, whether it's battery manufacturing, the production of uranium in the United States, I think, is a really great example of a country that has the highest annual needs for uranium, about 50 million pounds per year. In 2021, a grand total of 21,000 pounds were produced in the United States. That hasn't gone unnoticed at the Department of Energy, which is clearly trying to incent more local production. We're seeing it also in the historical producing states in the United States, places like Wyoming, for example. They want to get their local uranium mining operations back online because they've been turned off for many years. So when these things start to happen, it does feel like turning around an oil tanker. But once the momentum starts, we believe that it's going to continue for some time.
I'm going to take that as a yes. It's from you. Look, I think there's nothing good that comes from war, but one of the changes that the Ukraine situation has done is it has obviously pointed the torchlight very firmly on energy security globally, and it's changed the narrative around nuclear and therefore uranium. So that is the good news. But one of the things that the succession of quite traumas to the natural resource industry, and I'm going to start with COVID, and then the sort of the economic consequences of that, and then Ukraine's situation, is that companies, not just your own companies, have moved to a inventory model and moved away from a just-in-time model. Can you see utilities doing something like this going forward? They haven't kind of stepped up yet, but surely there's going to be a dawning realization that the security bit of energy security is super, super important.
Yeah, and I mean, it's obviously what's happening in Europe right now is the perfect case study when you lose a vital supply of natural gas that your businesses rely on, your citizens rely on for heating, electricity, industrial manufacturing, etc. You lose that. You see how immediately disruptive it can be, and I think that's one of the wonderful things about nuclear energy is. I keep talking about energy density, and people are probably like, well, what are you talking about, energy density? The amount of uranium, enriched uranium, that actually goes into the reactor core is actually an incredibly small volume. And once that volume of material goes into the reactor, it runs continuously for around 18 months. And if you contrast the amount of electricity, let's say, that you're producing over that 18-month period with that very small quantity of highly dense material, if you contrast that to other energy forms, whether it's coal or natural gas, it's an enormous volume of material. And so that has a storage challenge. So, even if you can get supply, you need to store it somewhere. If you need to store uranium at a nuclear power plant, it can be stored literally in one little building. It gives a nuclear power plant a huge advantage over, let's say a natural gas power plant that can run almost continuously with the right, secure supply. And this basic, fact in science is what governments are kind of finally realizing. And, public support is, I think, a huge part of the story. When you see public support shift like it has in Japan, and it's happening in other countries in the world, in Sweden, and et cetera, that's when governments, unfortunately, finally have the the confidence to make some of these decisions with energy policy, and you're seeing it right around the globe. And I think that's really the glacier that's starting to move right now.
Yes, interesting. I think the energy return on capital invested is something that's very, very much in the favor of nuclear. I'm kind of intrigued at some of this anti-fossil fuel rhetoric that's going around. I guess the table has turned somewhat there in that regard. But do you think that you're the beneficiary of some of that anti-fossil fuel rhetoric, or this is just a pure case of governments going, we need solid, reliable, consistent baseload energy, and we're allowed to now talk about it?
I do think we are becoming a beneficiary of it. And I'll point to a few examples. So on January 1st, the EU is finally including nuclear as part of its sustainable finance taxonomy. That was a multi-year fight amongst member nations, and that's finally being implemented. What that's going to do is twofold. One, if you're running a utility, it's going to give you access to cheaper capital. That's great. If you want to either do an upgrade or build a new plant or invest in new technologies, capital will be more favorable to you. I think from an investment perspective, we have heard from different institutions that said, look, I don't want to be penalized by putting nuclear or anything related to nuclear uranium in my portfolio today ahead of the official taxonomy decision because of all the SFDR requirements in the EU. So we do think it will open up more institutional investors to investing in the sector come January 1st. The UK is obviously working on a similar taxonomy, South Korea and Canada. So I would say that these taxonomies, I would even throw in the Inflation Reduction Act as almost being kind of in this vein of financial support for nuclear energy. I do think it makes the sector much more investable, as well as much more competitive relative to other forms of energy production.
Brilliant. I want to come back to the Sprott Physical Uranium Trust. Okay, so it's the Sprott Physical Trusts are kind of very formulaic in a way because well, they can be. There's no reason why they shouldn't be. However, with uranium, do you feel that now looking back, would you have constructed it slightly differently? How do you have enhanced it, or how would you have tweaked it with hindsight?
That's a great question. Well, we've been running these types of commodity funds for 13 years. So I think it's fair to say that when we designed the Physical Uranium Trust, at that time, 12 years of our knowledge and experience and insights went into the design. And I think that was really the reason why we had the response that we did from the marketplace. We are constantly monitoring the fund and trying to think about how to improve it. There are two ways, there's two really levers. There's, things you can control, and unfortunately there's things you can't control. I can't control the Fed and the cost of capital and whatnot, investor sentiment. But, obviously the things that we can control, a lot of it has to do with something very simple, which is education. And I focus an enormous amount of my time on education. And the reason for that is because I just find there's a massive knowledge gap. And,
of what and to who?
Well, like I said, when I have a call with let's say a portfolio manager running a multi-billion-dollar fund, and they're asking me kind of uranium 101 kind of questions, it, confirms to me that this has been a sector that's been ignored for a long time, and that people need to understand what's happening now, what do we think is going to happen, and how does it fit into the bigger energy perspective. I think we've seen more and more investors think about how they would like to be in the energy sector, but perhaps not completely in oil and gas. We've talked to many different institutional investors that have said to us that they're not selling all their oil and gas, but perhaps they're going to move some piece of their oil and gas exposure to things like uranium and uranium miners, because they just see a much better story there. Oil and gas are here for a very long time. And I say that because the energy infrastructure and systems that we've built that drive everything from heating industry, electricity production, mobility, transportation, these systems have been developed for the last 125 years. You just can't transition overnight. It's going to be a multi-decade transition, and they will all have a role in that transition. And the transition, unfortunately, is not going to be smooth. There's going to be lots of bumps. But I think nuclear energy is going to have its fair share at the table in terms of being part of that transition.
And I couldn't agree more, and I wish governments would have an honest conversation with their population about this transitional period and the actual need for fossil fuels to bridge that gap, if indeed it needs to be phased out. Conversation for another day. Just again, back to your product. We've got investors looking in. You've got this product, this Sprott product, Sprott Physical Uranium Trust. You've got other physical trusts as well, and gold and silver. They're much bigger markets. I'm sort of intrigued again. I know you've explained why you designed it like you did. You've cookie cutter approach to it, but I wonder how does this trust, the Uranium Trust, get affected when some of these big producers come back online, when some of these developers actually get over the line and start producing into the market? There's obviously right now, you've been the beneficiary of being able to mop up inventory from the spot market. But as developers and producers start putting more into the market, how does that affect you? Do you care? Does that kind of give yourself a sort of a timeline? Does it have a longevity to it anymore?
Yeah, well, look, I think there's really two big things happening, and the bigger of the two is clearly the utilities having the confidence to come back to market and procure more uranium as their businesses improve. They're making tons of money off electricity production right now, so they've got the confidence, that their governments are not in these kind of phase down mentalities anymore. And I think so. That's thing one. I mean, the bulk of the uranium demand is obviously going to go to end users, which are utilities. The second part is obviously non-end users, and those are financial speculators and different financial intermediaries that are interested in the commodity for the first time in many years. And I think, if you look at every commodity market around the world, there is a role for financial intermediaries and speculators to play. I mean, they're active in almost every other commodity market each and every day. So I do think there's a role for them to play. And in our experience, these types of financial intermediaries are just getting started in terms of their return back to the sector after essentially an 8-year absence in many cases. So we do think that's healthy for the market. We do think that the uranium market also needs to think about its long-term security of supply, because if you look at many of the demand models, they basically all say one thing, that we will have a growing supply deficit of uranium unless we actually bring new production back to market. And that supply response is starting. You're starting to see some of the mines in Canada, the US, finally, Africa, Australia being turned back on slowly. But now we're talking about the hard pounds. The hard pounds are pounds that are going to come from mines that are going to be built in 5, 6, 7, 8 years from now. And those mines have largely been mothballed for many years. Now they're getting back to permitting. That permitting process can take a couple of years. Then you're talking about a construction phase, which then could take 3 or 4 more years. And that's how the industry obviously secures its inventory over the long term, to ensure that more and more reactors around the world can be built, and that utilities will have security of supply.
Okay,
and that's a really long game kind of picture in terms of where we see this playing out.
Right, and let me flip some of those assumptions on their head, which is that not all uranium companies will get into production. So not all companies that claim to get into production will get into production, and to do so will require prices, significantly higher prices. Let's put it like that. I think most uranium developers currently are asking for $65, $75. Others will require $100 plus, and others, well, who knows if they can get in production. Now, what does that environment do for you? I've talked about oversupply in the market. What would that do for you? But what about continued undersupply? Clearly, you're geared towards what price you buy at and what price your stock is valued at, like a fine wine or a whiskey.
Well, I think you're bang on that. There are many different deposits and exploration companies that may never see the light of day in terms of production. And that's just the nature of mining. It doesn't matter what you're trying to explore for. It's a challenge. I mean, you're trying to find very high grade deposits. These are in some very challenging parts of the world to produce, to build a mine and then to produce a mine. And yes, you've got these basins in the world, like in Saskatchewan, that are very rich in uranium, but they're in the middle of absolutely nowhere. And so the cost to build a mine in these remote locations in northern Canada is expensive. So, $50 a pound is not going to build you any mine just about anywhere in the world. And that's the crux of the thesis that most investors are focused on right now. Is
$10 coming your way? Thank you.
Yeah, and
the crux.
That's the crux.
That's good. These are good jokes.
You got that. So, that's really the thesis that most investors have echoed back to me. Is they believe that the price is going to continue to go higher. And I'm not talking about overnight. That's not the market we're in, but it's going to have to grind higher over time to essentially build the mines that are going to backfill the gap that we're dealing with right now. So I think that's creating a lot of value creation opportunities for the mining companies. We obviously, as I said, we've had these deposits that were discovered 20 odd years ago. They're finally getting to environmental permitting. 2 years ago, nobody was thinking about any environmental permitting process and spending the money at $28 a pound. But, with term prices kind of hitting close to $60 a pound, that's, all of a sudden that's kind of in scope now for some of these projects. Not all deposits are created equally, obviously. Some have higher cost structures depending on jurisdiction. Some have lower grades. And you're right, some projects are going to need $80, $90, $100 a pound to be financed and built.
And beyond. I suspect that's if they can get the permitting and licensing in place, and the people skills shortages, which we understand are there now. So a lot of hurdles. Mining's tough. No one said it was easy. Now you're proxy to the price of uranium. So a safe bet. But if you've got a view on the price of uranium going forward and the scarcity of uranium out there, that's a nice, sensible bet. What are the other ways that people can invest into the uranium thesis?
Yeah, well, as you said earlier, it's a very tiny sector. So we really think of the world in two verticals. One, participating in the physical commodity itself, and you've got a bullish view on the price of the commodity, and you just try to participate through either our trust or other vehicles. The second way to play is obviously through the producers. And hope to be producers of the future. So you've got a couple of companies today that are large producers that are publicly traded. You've got a few late stage development companies and other companies that are getting back to market after being curtailed for the last few years. And then obviously you've got a whole plethora of exploration companies that are trying to find deposits of tomorrow. So. But I would say that one of the biggest challenges for the sector is its investability. Many of the really large investors we talk to say, this is a really interesting thesis, but I'm not sure how I'm going to get exposure to this because we run too much money. And I kid you not, I have this discussion all the time with people. If you think about the market capitalization of all of the uranium mining companies in the world, it's probably less than $30 billion right now. It's nothing. So when you're talking to some of these really large institutions, it's really hard for them to tick the boxes around their liquidity requirements, the risk management controls and whatnot, for them to really invest in too many companies to begin with. So I often say that smaller investors and institutions actually have an advantage right now because they're able to put their money to work. And I often say, like when I talk to institutions, kind of in the 2 to 10 billion range, I often tell them like you're in the sweet spot because you can actually get some meaningful exposure, whereas the big guys are still kind of scratching, saying it's too small still for us. So I do think this is a sector that's, in often cases you think of the institutional money being the smart money and having some kind of a structural advantage, but I actually think it's the smaller investors right now that actually have that advantage because the sector is just too small for the big guys.
Absolutely, and I would also say this again. We're this is being aimed at people coming into natural resource investing. Is start simple, maybe ETFs or some kind of trust structures are the simplest things. You don't need to understand it too much about it. You don't need to do too much diligence. It's investing light. If you do want to go down the route of investing in junior explorers, be aware of the risks and the sort of return profiles, and do your homework, please. Okay, always, right? We'll finish off, if you don't mind, slightly on the broader theme. You raise an interesting point. The size of the uranium market is small, but here's one for you. If you added up all of the mining companies, BHP, Rio, and everyone south of that, down to the explorers, it equates to about the size of 50% of Apple. One tech company. So that's the real universe we operate in. Now, with your broader Sprott asset management hat on, how are you seeing the next few years playing out for the metals markets, or even, I guess, precious? We'll throw precious metals in there too, because if the word super cycle gets thrown around a lot.
Yeah, we do, and I do personally believe we are in a new commodity cycle. I'm not going to quite call it a super cycle yet because I still think it's building
Quite good
ahead of
cycle.
steam. But I think it's going to be a very strong cycle. I think it's going to be a long cycle. And the reason why we believe that is because, at Sprott, we focus exclusively on commodities, metals, and mining. We have been in this through so many different cycles. And I can tell you that for most of the last 10 years, you could barely get an institutional investor to talk to you about mining. Like, they're just like, stop the meeting. I'm not interested in any of that stuff. The world, unfortunately, became very addicted to very cheap money. That cheap money did wonders for a lot of different companies and sectors and technology. And people became very fixated on technology, fintechs, cryptos, all kinds of things that were huge beneficiaries of cheap capital. Unfortunately, when you starve a sector of capital for years and years and years, what happens is your exploration budgets disappear. Your development of new mines is curtailed. And then all of a sudden you get a shock in the system, or there's a pivot and you say, well, we want to electrify more. We want to decarbonize. We want to move to EVs. And you go, oh, guess what? We need a whole bunch of raw materials to actually enable all these things to happen. Well, we don't have them. Oh, well, how long will it take to build a new mine? Well, it's 15 years. Can you wait that long? No, we can't wait that long. We have a problem. So there's a massive mismatch. And what's happened is that the world is kind of finally waking up. COVID was obviously a real shock to the system. People started to think very differently about supply chains and how much we've kind of offshored and how much we've underinvested in real things, whether those are, energy infrastructure, whether it's different forms of mining. And what we have noticed in the last 2 years is a very different attitude. And it's different. I would say there's a more progressive kind of attitude around critical minerals for energy transition and energy systems. We seem to have a different set of investors that are focused on things like uranium or cobalt or lithium or copper or nickel. It seems to be a younger group. They seem to be more focused on bigger picture goals, whether they're decarbonization or energy security. Precious metals investors are a little different. It's more about a store of value commodity, with gold and obviously silver is a bit of a hybrid metal with monetary and industrial. I would say that precious metals the last couple of years have been less interesting to people, not just because the prices have been off, but I think they seem to be more interested in the types of mining that we will need to facilitate the energy transition that we talk about a lot at Sprott. So I think attitude is so important, because if you can't get your head around it, you're not going to put any money to work. And if there's no money coming back to the sector, there's no investment, there's no value creation opportunities. And so we think this cycle is really being fueled right now by this growing groundswell of support and acknowledgement that we need to do all of these things, and they're going to require a whole lot of raw materials that happen to be commodities.
Couldn't agree more. Great summary, and also you raised an interesting point with questions we've been asking the past few months about, younger generation, Gen Z, millennials. What's their attitude to gold? They seem to be focused on stuff which have a utility to them, and obviously silver sneaks into that category with solar and other uses. So I wonder what gold has in store. It's the biggest player, but it's also a slightly older profile, it seems to me, and I wonder at what point or what it's going to take for people to get interested in gold. Again, it's a problem for, I guess, in the distant future, but it's interesting to see the younger generation be goals focused, outcomes focused, and with some pretty big thematics running in there as well. Well, John, appreciate you coming on, and I'm sorry we should have spoken earlier. Had a bit of hiccup at our end. What a great way to end the year, talking to you. 2023, it's going to be better than 22, hasn't it? Please.
I'm very optimistic about 2023 because I do feel as though central banks around the world are having their desired outcome. I think you have to get down to the Main Street level and connect the dots and just see how much of a profound impact higher interest rates are having across every industry right now, the housing market. This is going to stall our economies. This is going to change behavior. This is clearly having a profound impact on certain sectors of the economy that have really been levitating on the back of 0% cost of money. And I do think we're closer to the end than the beginning. And as we get closer to the end, I think a lot of institutional money that's been sitting on the sidelines is going to start looking for new ideas and new homes. And I think mining and uranium is going to get its fair share. And I think that's why we remain optimistic, even though the macro environment has been incredibly challenging since the spring.